Worldwide in the financial press right now, we're hearing a lot about the term audit quality. In Australia, we've got a joint parliamentary inquiry. There have been numerous inquiries in the UK, in the US, in Europe. There's all this discussion about the term audit quality. So today I thought I'd dig into what exactly is audit quality, how exactly do we measure it, and what can you do as an auditor to support audit quality on your audit engagements and support your firm. So let's get into it. What's up, audit fans? Dr. Amanda White here, and welcome back. If you're a regular subscriber, if you're new to the channel, my name is Dr. Amanda White. I'm an audit educator. I teach auditing at university. I have a PhD in behavioral audit, and I came from Coopers & Lybrand, which is now PwC, before moving into academia. And I really love digging into the nuances of what audit is all about and talking about this fantastic profession that I'm really proud to be a part of. To kick off this video, we're going to talk about exactly what is audit quality. We know what audits are, we know what quality means, but what does audit quality mean as a term? And rather than me read something out of a textbook to you, we're going to go to an expert, and that expert is Professor Roger Simnett. Roger is a Scientia Professor at the University of New South Wales. He is the chair of the Australian Auditing and Assurance Standards Board, and he's also a former member of the International Auditing Standards Board, and he's led a significant amount of research and standard setting in this particular area. So Roger's going to tell us about what exactly is audit quality.
So my name's Roger Simnett. I'm the current chair of the Australian Auditing and Assurance Standards Board. So first question we're going to have is, what is audit quality? So we're starting with a really easy one. There's no real definition of audit quality out there, so everybody has their own understanding of what audit quality is. For me, it means that if I'm thinking about financial statement audit quality, that the financial statements accurately reflect the economic reality of the organisation, and that of course is conditioned by the quality of the accounting information which is going in there and the quality of the system. So audit quality is something that will lend itself to increasing the quality of the economic information coming from the organisation. By the system, I mean the internal control system, plus the quality of management and everybody else who is preparing the information.
We can see from Roger's discussion there that audit quality isn't this really easy to define thing. It's really complex because it relies on individual people making judgments that lead to a quality audit. Now, of course, we know that there are different levels of assurance. You can check out my video from last week about defining those different sorts of assurance. But how exactly do we measure it? Now that we know what audit quality is, how do we measure audit quality? And Roger's going to go into that in a little bit more detail, and then I'm going to break it down afterwards.
No, I don't see the one objective measure. Even composite measures don't necessarily work. A quality audit, if you consider it, so it may be that the auditor goes in there and finds that there is real quality information and real quality systems which are put in place, and then the auditor doesn't really have to do much. They follow the auditing standards in that. That's a quality audit. And another quality audit is where, the systems are deficient, the information is deficient, the underlying information in the first place does not follow, the accounting information does not follow economic reality. The auditor has to work really hard. And so in those places, they may not be able to get to 100%, but they really do improve the credibility of that information. So that's a quality audit. So, I think there are a number of dimensions to this, and I think what we need to do is try and capture those different dimensions, measure those different dimensions so that we can pick up some of those quality. I do get worried about what I see as the different dimensions, because I think they can lead individually to behaviours that we don't want to necessarily have being judged on. So I am also worried about just combining those dimensions. So it's really hard. Let me take one of the dimensions. So it may be how much the auditor finds in the financial information and gets adjusted through. And that's very much along another definition of audit quality that academics use as to, firstly, it's what do you find, and then is what do you report. And again, if the information's very good, a quality audit may not find anything. So that dimension is not going to be necessarily beneficial. If the underlying information is very poor, there might be a heck of a lot, and the auditor may find a heck of a lot, but there still might be a heck of a lot outstanding. And that still may be a deficient audit, although the auditor has improved the information.
So it sounds like it's really complicated because it's professional judgment on information that also requires our professional judgment. So it's layers of judgment upon each other.
And more professional judgment and complexity of the underlying subject matter and the systems and the organisations that we're seeing, they're becoming more complex. The accounting standards are becoming much more complex and they're requiring much more professional judgment. So we see the professional judgment going in there. We see the areas in which they have to be applied increasing in professional judgment. And then the auditing standards are principles based. And so they require professional judgment. So professional judgment and professional skepticism, two of the underlying characteristics of the auditor. And so then there's the application. So there is this increasing requirement we are seeing, and increasing imposition on the auditor through the complexity and the judgments that are involved in accounting standards, through the complexity we're seeing in the organisational structures that we're auditing, and then there's increased complexity in the auditing standards that are responding to those particular areas.
Now you can see from Roger's explanation here that it's not really simple. The research has a really abstract way of trying to measure audit quality. How many material misstatements does the auditor manage to detect out of the financial statements that are there? And then of those that they detect, how many get reported and adjusted for? So poor audit quality could be because the auditor fails to detect material misstatements, or they detect them, but they fail to push management to make changes or modify their opinion if management refuse to make those adjustments. So in terms of unpacking that a little bit more, if you fail to detect a material misstatement because you didn't identify the significant risks correctly, or you didn't gather the correct evidence, you failed to meet the auditing standards, then that's one component of audit quality. But what if you find misstatements like they did at Enron and you fail to request management make those changes? At Enron, Arthur Andersen and the company work together to hide material misstatements. Well, then that's a failure in audit quality as well. But of course, these things are unobservable phenomena. We can't exactly go in and observe auditors doing this. ASIC does the best they can by looking at audit documentation after the audits are complete to try and detect whether auditors are actually failing to detect material misstatements or detecting material misstatements and not requesting that management make the adjustments or modify the opinions accordingly. Now, there could be other ways of also measuring audit quality that we haven't considered. ASIC use some sort of process to determine which audits get the thumbs up and meet the quality standards and which ones don't. And they certainly are starting to report on those. But that might not be the only measure. What other sorts of measures could be out there? That's something that certainly regulators, journalists, CEOs and audit committees and audit firms are actually trying to figure out. So now that we've looked at Roger's commentary about audit and audit quality, what are the sorts of things that you as an auditor can do to make sure that you're supporting audit quality on your engagements? Well, I've got 3 tips for you here. The first one is to make sure that you understand your audit standards. Don't just memorize them if you're at university studying to be an auditor or studying for your exams right now. It's understanding the underlying meaning that will mean that you'll be able to apply those auditing standards out in the field. And don't be afraid to come back to your auditing standards if you're unsure about something. They are meant to be there as a guide for auditors. So tip 1, make sure you understand your auditing standards. Tip number 2 is about working as a team and working collaboratively. No audit is done alone by a single person, or maybe small ones are, but big public company audits are not done alone. That means the whole team needs to work together as one collective body. That means that something you might identify in inventory, you might want to bring up with people who are auditing sales or some other part of the accounts, because we know from double entry bookkeeping, everything is interconnected. Working with a team also means that you're working with people that have more experience than you and less experience than you. Leverage off and take advantage of the experience within your audit team. Don't be afraid to ask questions, to raise your hand and say, I don't think this is right, or to give advice and mentoring to others. That's the only way we really learn professional judgment and decision making. You can study it as much as you like in books, but unless you're sitting there trying to make these decisions, potentially failing at it, but having a senior or a supervisor help you learn the right way, well, if you can take advantage of those learning opportunities, you'll be a fantastic auditor. So tip 2, make sure that you collaborate well with your team. The third tip is professional skepticism. It's enshrined within our auditing standards. Sometimes you hear it discussed as trust but verify. I don't really like trust but verify. Verify implies that sort of positive confirmation bias, but it's having that questioning mind. It's asking yourself, does this make sense with what we see about this client? What we know is happening in the industry, in the financial statements, in the press in terms of government scrutiny? Does this piece of information make sense within the whole puzzle of the organization? If we can apply that professional skepticism, say, does this make sense? Look for things that are out of place. Look for things or areas where there are gaps in our knowledge, then you'll be doing a lot to support audit quality. So that is audit quality in a nutshell. We could go on for hours and hours discussing audit quality. There are entire academic conferences devoted to ways that we can evaluate and measure audit quality. But if you have an idea on how we might measure the quality of audits, the quality of auditors, I'd love to hear about it in the comments. As always, if you've got any questions about today's topic, audit quality, professional skepticism and the measurement of it, then definitely drop them below and I'll answer as soon as I can. If you haven't subscribed, please consider clicking the subscribe button for all the latest news and views on audit and accounting. Otherwise, thanks for watching and I'll see you next time. Bye.